Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is January 5th, 2016, and today is Tuesday morning. So looking at the markets on the back of the first week of trading, what a whopping day yesterday, a big sell-off in the markets, and we'll discuss that just in a second. Economic calendar today coming up. We have a GBP number coming out at 11:30. It's a construction PMI number. It's listed as a very important number. Not sure if it really is. We'll have to see as the day progresses. And then just keep in mind, non-farm payroll is this week on Friday, 3:30 p.m. South African time. So that's really the highlight of the week. So I'm going to even highlight it this Tuesday morning. But before we discuss any further, any of the other news, we have to pay tribute to what happened yesterday. This business is a consecutive business. It's a cumulative business, which means that things that happened 5-6 months ago will surely creep up again. If you guys remember, we had the big sell-off in China towards August that really rattled the markets internationally, and now we're revisiting that as the year progresses. We shook it off, but we never shook it off enough that we made our highs again. So that is more inclined to feel that China can really bring down our markets internationally and make us back into a bear market. So keeping that in mind, we're looking at the EURUSD here. EURUSD sold off as the market sold off, right? The dollar always gets stronger, and sure enough, we were at a threshold last week, a 109.55, and now we're trading a 108.28. That's a 120 pip move on one lot. That's $1,200 in less than a week. So, you know, you got to be in it to win it. You got to pay attention to the thresholds, especially the ones that I put up here on the site, and it's really important to make these types of support and resistance levels just as barometers for yourselves. Now, I'm not saying that you could have taken 128 pips exactly, but out of that 128 pips, you could have certainly taken 100 to 110 pips for sure. So this big sell-off is just us making the proper homework last week of seeing that it didn't break this higher line here. A little bit of a head and shoulders short term here, and now we're back to this 108.28 level. Now the question is, are we going to go revisit this 105 level? That remains to be seen, but at least we know that we are trading in this range and that we should respect the support and resistance levels. And remember, as we hit resistance and support more and more times, it becomes more and more of a important effective number. So the more times we hit 108.28 and we bounce off of it, the more likely it is that it's going to solidify as a support level. So that is really important to keep in mind. Looking at the Dow Jones, we sold off when we gapped down yesterday about 400 points, and then we rallied right back about 120 points. So it was a little bit of a hard day to trade within the day. But as you can see, we're back in the bottom of this level at this 17,041 level. And so the question is are we going to bounce off of it, which we're more likely to do because it is a non-farm payroll this week. And you know, if the numbers do come up very positively, it shows that the economy is still happening. Now, this is what I was talking about. We never bounce back. When we bounce back from the sell-off back in August, September, we never bounce back to our highs. We only bounced back to 17,080. 880, and you see that this is a tremendous resistance level right here. As you can see, I'm going to just highlight it for you. This 17,080 right here and right here, we've had this, it's like a brick wall. Every time we hit it, we never breached it. And so, like I said, the more we hit something, the more likely it is to become more solidified in a stronger resistance. So we never came back to this 18,200, 300-ish level, and now we're back at the 17,000. So, you know, are we entering a bearish market? That is really my next question, and that has to remain to be seen because we'll have to breach the 17,000 for that to solidify. And a bearish market takes over time. It's just like a bull market takes over time, a bearish market also takes over time. So there is definitely room to go down altogether. We had this tremendous sell-off back in 2009, 2008, but we've been in a bullish market since then, as you can see. So altogether, there should definitely be a correction in the market, just a matter of when and how much. So I'm paying more attention to the Dow Jones because I think this year we'll have much more emphasis on the markets there. Looking at the other currencies, dollar got stronger across the board. We're looking at the United States dollar versus the Canadian dollar, where we're almost back to our all-time lows for the Canadian dollar at 139, and we're bouncing right back. So I would keep an eye on this altogether, okay, because it is trading. Okay, the Canadian dollar is trading. The U.S. dollar versus Japanese yen faltering last week, and now we're breaching this point at 120, and we're trading at 119. Our next level of support is 118.40, as you can see here, and so I'd be inclined to think that we would have a sell-off here, okay, as the Japanese yen has gotten a little bit stronger, and we look like we're tapering off for its all-time lows. Also, looking at the USD ZAR, not much happening there, honestly, as the market yesterday was quite quiet for the USD ZAR. Looking at gold actually, let's just bring it up on the screen. Excuse me. Gold just bouncing yesterday very heavily because of the news against the what's happening in China. So we're at the upper range here at 1077. It is something that you might be inclined to trade. If we do break out from this level, surely we could hit 1100, and that would be a relief for most gold investors, as we've been selling off for the past 3.5 years in gold. So there are things happening. Just keep an eye on some of the thresholds we discussed today. See if they get the bounce that that we timely deserve. It might be a little bit of a funny day until we hit Friday with the non-farm payroll numbers that are going to come out from the United States. So keep that in mind. This is Fred Razak at CM Trading. I want to wish you guys a great trading day. Thank you.